Ladies and gentlemen, good day to you if you can hear me. And I wish you a happy new week. It's a new week of opportunities in the market. And today, we're going to check what we have for the market opportunities for this week, starting from the December 2nd till December 6th, 2024. We start with the fundamental analysis. My name is Yemi Olaleye, market analyst. And here is the weekly outlook from the fundamental to technical analysis. For this week, starting from the Monday, December 2nd, 2024, we have an highlight of US dollar news coming out as the high impact news, which is the red folder, and it's based on ISM manufacturing PMI, 4 p.m. Nigerian time. On Tuesday, we have CHF and USD, 8:30 a.m. and 4 p.m. Nigerian time, respectively, which entails the CPI monthly by monthly for the CHF and JOLTS for US dollar job openings. On Wednesday, we have from AUD to Great Britain pounds to US dollar from 1:30 a.m., 10 a.m., 2:15 p.m., 4 p.m., 7:45 p.m. Nigerian time for these outlooks. However, these news are meant to be volatile. In fact, as a matter of fact, this week, it tends to be a very volatile week, so we have to trade with caution. On Thursday, we have another USD news coming up 2:30 p.m. Nigerian time, which is the unemployment claims. The same 2:30 p.m. time on Friday, we have Canadian dollar news coming up at the coming up for employment change, unemployment rate, and we also have the USD coming up by 2:30 p.m. Nigerian time, which is the average hourly earnings monthly by monthly. And at the same time, we have the non-farm employment change and unemployment rates coming out for the US dollar. All of this news highlighted from the beginning of this week, which is the Monday 2nd, till 6th Friday, December 2024, have to be very volatile opportunity and tendencies in the market. So we're going to go in that direction. And let's go into the technical outlook and let's see what opportunities we have in this market, therefore. Starting from the DXY, which tends to determine a lot about what EURUSD, Great Britain pounds USD, USD will become of this week. Starting from the monthly outlook, we see that DXY itself has been a very bullish market from the last month of November, and currently to the end of November, it was a bullish candle, which ended up breaking a significant resistance level, which is a high price here, which was the high of October 2nd, 2023, which was taken out this month or last month, November. And since then, the market has retraced significantly within that price range. And currently, how long will this still retrace, or how long will this continue in a bullish direction? Let's check that opportunity on the weekly time frame. When we go through the weekly outlook, we're going to see that the market has actually printed a bearish week for the last trading week opportunity. And the last three candles posted or printed at this price level of noticeable resistance happens to be a candlestick formation pattern we refer to as the evening star. And that's basically, it's about a sell opportunity and momentum in the market. So therefore, on this outlook alone, I would be expecting the market to drop further as to much as this price level here. So which means in the beginning of this week, I will be expecting this to happen on DXY. The market to retrace a little bit back to this price level and continue dropping. This will be my outlook on DXY for the weekly time frame. Let's go to the daily time frame and see more opportunities right there. We see that consecutively for the past 4 trading days, it's been bearish on DXY. And this was a little bit of gap between Thursday and Friday market opening. And that simply tells me that I will be waiting safely to buy or to sell this market from this price level on the daily time frame when you see this. So this is what I'll be expecting. I'm expecting the market to still come to this price level. This may take an entire week or less, but then is what I'm expecting in the market. However, I'm expecting a bit of buy into this price range for DXY. And from there, I think the market will start selling based on what the market is showing. So the anticipation is the same. I will be expecting the market to play out that way. Most importantly, I'm going to trade with risk management. And I also ensure, I'm also pleading that you do the same. That's just it. All right, on the 4-hour time frame intraday opportunity for the DXY, let's see what opportunity we have in the market. Ideally, when you look at this, it's showing more or less like this is head and shoulder pattern. This is more or less like head and shoulder pattern. This is the shoulder, this is the head, this is the other shoulder, and you'll be expecting something like this to play out fully, right? But then it is what it is in the market. We can only judge based on what we are saying right now. We can only talk from the perspective of what the market is showing us. Every other thing, apart from that, we are not too sure or too certain. So what we'll be doing now is we're going to be expecting the market to play out into a down direction on DXY intraday opportunity 4-hour time frame. And this is the outlook on the 4-hour time frame for DXY. All right, without wasting time, this is the outlook here. Without wasting time, let's see what we have on the EURUSD and the rest of the guys with US dollar. Going to the EURUSD, starting from the monthly time frame. USD itself has been a very, very bearish momentum from the last month of November, even October. And currently what we saw is the low price level that we anticipated the Euro US dollar to take out in one of our analyses, I think weeks back. We've always been anticipating this level to be taken out. And this last month of November, the market actually took out that low. And after it did, it started retracing, and the market has eventually retraced about 240 pips on average in the market. And what that means is simple. We're going to be expecting a bullish December as it is from the perspective where we can define more reasonably on a lower time frame. How do I mean? After seeing this kind of rejection on the monthly time frame, it is only natural for us to expect a little bit of buy into the month of December. So let's see the weekly time frame. Let's see how that will play out. On the weekly, we saw the low right here. We saw how the low was taken out right there. Close below with body closure and rejection, and only for the market to open with a gap for the last week, right? And after then, the market was able to deliver a little bit of sell, which was about 56 to 70 to 60 pips on average. And since then, it has bought over 117 pips in the market, and that is on weekly time frame. But how do I mean to measure this? Ideally, we can see an imbalance level right here in the market, which is on weekly time frame, and the market has about 70 to 80 pips to move into the threshold of that imbalance level. And that is not all. Apart from me expecting to buy from here, what is the reason why we're taking a buy? This has shown a significant bullish momentum in the market for this last week candle closing at 1.0574, and I will only expect the market to keep going in the upward direction. As much as we have the DXY dropping in the downward direction, Euro US dollar is expected to be buying and going into the upward direction. So basically, I will still be expecting Euro US dollar to keep on buying to this level or more. It's just a matter of time for this week. We have about 400 pips upward as potential movement in the market. It's expected to be a very volatile week, but ideally more reasonable. The market may not do up to that 400 pips, maybe not, but ideally we can be expecting the market to get to a price level like this, which is very, very reasonable. From this price level is about 250 pips, so this is very reasonable. So which means I will be expecting the buy on Euro US dollar to still come to a price range like this on the weekly time frame. Let's go to the daily. Let's see the opportunity we have on daily time frame. Let's see that. Let me delete this. Okay, so right there, we've seen how the market has created a structure of breaking or sweeping the liquidity below, and ever since then, after that strong rejection, all we've seen is further rejection, creating higher highs and higher lows for the candles right there. And the last candle we saw was a bullish candle, which was also bound with this resistance line right here. But currently the market closed at 1.0574, which still has more opportunity and tendency to move in the upward direction. To therefore refine where my expectation would be for the week on the buy of Euro US dollar, I'll be expecting the market to do something like this into this price range here. I'll be expecting the price to do something like this into this price range, which means I'll be expecting more buy even on the daily time frame, which will be about how many pips? Which will be about 280 pips on average in the market. This is a potential inverse head and shoulder right here. Look at this shoulder, head. This is another level we can be anticipating to see another shoulder in the market. So which means we may likely see most likely we may see a little bit of sell in this market. So which means the market may just do something like this to this price level, and we can see a movement from there into the upward direction. This level of imbalance level is where I'll be expecting the price of Euro US dollar to get to, and that is on daily time frame for Euro USD. Let's see the 4-hour time frame. The 4-hour time frame is also showing a potential inverse head and shoulder pattern. But how well can we define this? What exactly are we expecting the market to do? Over time, what we've seen so far is that the Euro US dollar has been creating series of higher highs in this trend, in this band right here. Okay, and for what this is showing, it's more or less like we can be waiting for Euro US dollar to still come to a price level like this, for Euro US dollar to come to a price level like this, and continue buying. So basically, it is a good thing that we can expect to see the market coming to a discounted price level before we buy in the future, and we can wait for the market to get to a premium price level before we sell in the future. So ideally, this is what I'll be expecting to see on Euro US dollar 4-hour time frame, and this is basically what my outlook is. Okay, without wasting time, let's see what we have on AUDUSD. I think we are done with the Great Britain pounds US dollar. We're also done with the Euro US dollar. And by the way, this has the tendency to still go up more than this. Okay, this is just an outlook. So what the market will unfold in course of this week will determine a lot about what we're going to do. All right, let's check out what we have on AUD US dollar. AUD US dollar. AUD US dollar. So let's see from the monthly time frame. From the monthly time frame, we have a strong bearish momentum as candlesticks for the month of October, and a bit of tussle between the bulls and the bears in the month of November for the AUD US dollar. All right. So to keep it simple, this low level has been expected for a very long time now to be taken out in the market, just like Great Britain pounds US dollar and Euro US dollar. But AUD US dollar failed to do that. In fact, sometimes it shows more or less like it's not really showing a precise direction of movement, but it's okay. It's expected in the markets. And what do we have here? We've seen this rejection right there for the last month of November. All we can expect for this month is to see a buy in this market. This price range is very, very effective. Is not really induced, but is balanced, so to say. So this is a balanced range price, or balanced price range. And as you can see, there's nothing here about imbalance or fair value gap that we can target. So basically, we can expect this market to do a bit of buying, but on lower time frame, that will be more clearer. So let's see that on lower time frame. On a lower time frame, after the series of 1, 2, 3, 4, 5, 6, 7, 8, or 9 weeks of drop in the bearish direction, previous week was a bullish candle, and the last week ended as a bearish candle, which was a total bearish candle that the bulls actually took over before the week runs out. And then they pushed the market, they pushed back and bought about how many pips? They bought about 80 pips from what the market has sold all over the week. And currently, the candlestick for the last week ended more or less like a hammer, and that is a bullish signal for buy. That is a bullish signal in the market. So, which means for this month or for this week, we will be expecting more push from the bulls in the market, whereby we will see how the markets will interact and move into a higher price level, where we can expect something like this to happen in the market. You can expect something like this to happen in the market. So which means I'm not just going to sit and jump in a buy right now until when the market opens and I see the reaction the market is showing. On weekly time frame, however, this is the AUD US dollar weekly time frame. Let's check out what we have on the daily. On the daily, we have 3 sequence of days, 3 days back to back that has been bullish. And from that now, we've seen how the market has turned out to be a bullish ride for the Wednesday, for the Thursday, and for the Friday. And what we can see also is more or less a potential inverse head and shoulder. How do I mean? This is a swing, this is a retracement backdrop to create a lower low in this market range, and this is a shoulder, this is the head right here, I will only be expecting the market to create another swing, which will form the second shoulder, which will give more confidence to buy into a range like this at the premium price level. So we're not going to just jump into the buy. We're going to wait for the market to show us these signals before we jump into that buy. And on intraday opportunity on AUD US dollar, this is not really too clear as well, but we can see this is forming more or less like a W pattern, which is the double bottom. Right here is the swing. Then we've seen the retracement back and forth back to the base of almost equal low level pricing, and the market has actually moved and currently close to the neckline of the retail sales, right? And for this, we'll be expecting the market to move a little bit more when the market opens, to create a little bit of movement back into this level before we can see that be a bullish opportunity. We can see the market to create something like this, then go bullish. This is the anticipation. This is the outlook on the AUD US dollar for our time frame. So this is very, very good for intraday opportunities in the market. And as well, of course, if you are trading this, you have to trade with proper risk management. That is most important. So this is the outlook. This is where I'll be expecting this to get to. It's a new week of opportunity, so we're not going to jump into market. We're not going to rush. We're not going to act on any impulse. And this is how it's going to be. All right. So let's go to the US dollar. USD CAD rather. USD CAD. So on the monthly time frame, what can we say about USD CAD? USD CAD, most likely, a lot of people will be on the sell now because that's what it's showing. All right, last month of November happened to be a bullish candle for USD CAD, which of course in turn take a return at 1.4173, and it ended as a tussle between the bulls and the bears in the market, which closed for last week at 1.40052, which was also a very important price level, which was a psychological zone. And of course, what will happen from there? Will you be buying or will you be selling USD CAD based on what you're seeing on monthly time frame? That will never be clear until we go to a lower time frame, like the weekly time frame. And on the weekly time frame, the previous week was a bearish candlestick formation pattern, and the last week was also a very massive bullish candle, which in fact created about 233 pips. And after then, there was a big rejection in the market, and from that 233 pips on average, it retraced and recollected about 180 pips on average for last week. So for that, therefore, the market closed more or less like a shooting star candlestick formation pattern at important high price level, which we can reconsider as a discount, as a premium price zone. And with this outlook, therefore, what we've seen so far is when the market created a lot of movement like this, there are so many opportunities in that gap where the market has created to come back to as a discount pricing. We have so many imbalanced price levels right there. There's also a complete price range right there, but we have a lot of opportunity in that gap. So which means we may be expecting more of a sell momentum for the USD CAD to even come back into this price range, which is about 330 pips to the threshold of that fair value gap level. And of course, let's further refine this on a lower time frame, like the daily time frame in the market, and let's see what opportunity we have on the USD CAD. After this extensive and massive swing into the upward direction of the market, we had a little bit of retracement, which is less than 30% of the entire swing at 1.3958 to 1.3828, and the market created another higher high and came back to create another higher low. And within that price range, the market has created that break of high structure, which was at 1.4174, and retraced for that day, which was Tuesday of last week, and it closed as a bearish candlestick formation pattern, which was actually a shooting star precisely. And the last 3 days of the week, which was the Wednesday, Thursday, Friday, created a bearish candles, and those bearish candles actually, they were creating series of higher lows and lower lows and lower highs and excuse me, we're creating lower highs and lower lows in the market, just like this, as you can see. So ideally, I would be expecting the market to create more opportunity for a sell momentum right here to do something like this in this market. So basically, this is been my outlook for the month, for the week on USD CAD. More than 240 pips on average is right there, but I'll be expecting the market to move in this perspective before I jump in. because I understand well that the market is not about being right, it's about being progressive in the market. And one of the ways to be progressive is to anticipate that anything can happen. But we cannot jump in and say we're expecting buy or sell. No, we must have a particular direction that we're anticipating in the market. Therefore, on USD CAD, I'm expecting the market to be a dominant sell for this week, and therefore I'll be waiting for the market to play within this range, and my stop loss will only be above this price level here, and I would be taking a sell opportunity in that range. So let me take that again. I'll taking that sell from this level. This is it here, and this is the opportunity in the market for this week on USD CAD. I'll be taking a sell. If you're an intraday trader, this 4 hours will be better for you. If you're a day trader, this will be better for you. Okay, this is my outlook on the USD CAD. So let's go to the 4 hour time frame. Let's see what we have there. You can see when you have a very long, massive bullish candle like this, most of the times in the market, it will come down gradually. All of this liquidity pool, the market is going to grab them back gradually. Everything you see here, the market took time to get them back again in the market. This took like 3 days, but that's what it is. So ideally, this is on 4 hour time frame. I would only be expecting the market to do a bit of retracement after this level has been rejected right here. I'll be expecting the market to play around to the top or to the high of this candle, which is the wick of this candle of 1.4046. And when the market gets there, I'll only be expecting the market to play around it, and this will be my stop loss level. And from there, I'll be taking a sell opportunity on the USD CAD. Okay, that's the outlook on USD CAD for this week. And last but not the least, which is the gold. Gold has been a very good boy for some times. It's been bullish and bearish at the same time for the last month. And let's see what we have on the monthly outlook for gold. So last month happens to be a very massive bearish candle for gold, which delivered about 2,000 pips more. And then it's only about something. We saw how the market has actually moved and how it has rejected the price level. At the beginning of the month of November, my analysis was to ensure to wait and see how the market will play out within this range, and that is exactly what happened. The movement here to this price level is called fair value gap level, and what the market did in the monthly time frame for gold is to move directly straight down to fill up that essential price level, and that is exactly what the gold has done. After filling up that fair value gap level, it's rejected immediately, and currently it's forming more or less like armor, but then at a resistance zone, that will be an hanging man formation pattern when it comes to candlestick. But then what are we expecting on gold for this week? It's been bullish all over. If you have a bearish movement, it's only a temporary thing. I will still be on very strong on a bullish momentum. And let's see what opportunity we have there. On the monthly, we've seen a bullish we've seen a retracement from the bearish outlook or from the bearish candle. And on the weekly, what is this telling us? Last week happens to be a bearish candle which retraced more about 40% of the entire movement of the pips it has sold in the market. So on this, for this week, what are we expecting? Are we expecting gold to buy, or we're expecting gold to sell? We're not going to sweat more on it, because right there we've seen the weekly opportunity right in the market, and it closed at 2650.59. And with this little bit rejection, we can be expecting gold to be more bullish for this week. And if we want to expect that bullish move, we have to check out take a good look at the chart, and at the same time complement whatever we've seen with the fundamentals to enhance our clarity for this week. And therefore, on this gold, I'll still be going on a bullish bias on this gold. I'll be going on a bullish bias for this weekly time frame, because the movement right here is still very, very much of bullish trend. And from the beginning of this price level to the beginning of this, to the end of this swing, what gold has retraced is more or less about 80%. It's a very deep retracement, and market has come back here to create a very long, massive bullish Marubozu candlestick like this. Market has actually came back to play more than 50% of that and closed at this price level. My bias will be bullish or good for this week, but let's see what we have on the daily time frame. So on Monday we have about 1,000 pips drop on gold to this price level, and this was Tuesday, Wednesday, Thursday, Friday, which all of it has not done up to 50% retracement of the Monday drop movement in the market. And when we look at that, we're going to see that the fair value gap in that range has not really been completed in the market. But however, this is not a limitation for us to take a buy in the market. So what we'll be expecting is to see how gold will do a bit of retracement to claim a little bit of low before we see the buy. So what does that mean? be expecting gold to come down to claim a little bit of this lower ITM, the doji before it, which was the daily candle for Thursday, for the market to come back there and claim this level. This will be my anticipation on gold for this week on daily time frame. Going to 4-hour time frame, let's see what we have there. On the 4-hour time frame, so we're expecting gold to come down a little bit more. It has created a higher low, higher high, and higher low, higher high, with strong sense of bearish momentum on 4-hour time frame, which the last 4-hour candlestick has been creating series of lower highs and lower lows. But of course, and we check at the fair value gap level on the 4-hour time frame, it's simple. All we can be expecting gold to do for us right there is to create an opportunity for more bullish momentum at a price level like this. So right there, market is already inside that range, and I think that the market will still do a little bit of sell into this range to complete this level, which is the institutional reference point, and do something like this. So I'm expecting gold to still go back, and before the end of this year, most likely it may actually still claim the all-time high to break the record again. So this is the outlook on the 4-hour time frame. Let's check what we have on the 2-hour time frame for gold, or probably the 1-hour time frame. The anticipation remains the same right there, because the market has actually created higher highs and higher lows, higher highs and higher lows over time, and we can only be expecting the market to create a little bit of movement to the discount price level so we can buy cheaper and sell to a better price level at about 2726.68, and that is quite good number of pips. All right, I wish you the best trade with proper risk management. It's going to be an awesome week. Merry Christmas and Happy New Year in advance. Do have a wonderful day. Click share and comment if you have any question. God bless you and have a wonderful trading week.